Alrighty, welcome to the Euro Dollar London session recap for Wednesday, the 27th of July, 2022. So daily chart is obviously heavily bearish, right, in this nice clear swing bearish range, coming off this old level of weekly demand and also that major psychological sort of round number level of parity. So not too surprising that we start to see that daily pullback starting. Obviously, ideally, we would like to see price pull back to above the EQ of the swing leg, right, up into these premium levels of supply. But we know that price does not have to do that, okay? So we always have to be aware as price pulls back. If we start to get those lower time frame confirmations, right, that price starts to shift bearish, then of course we can start to target that low. But of course, we do have some minor levels of demand here that price could reject and continue to have a bit more of a complex pullback. Now, on this data feed, all of these candles broke the prior candle's low. So there is actually no, daily bullish structure in this leg for price to break. So technically this low has, this demand zone has not broken any structures. So it's not that strong, but I am aware of it. Okay. Like there is always that possibility, of course, that price can move up here. But we can, I'd want to see like at least M15 starting to shift and bullish order flow coming in, if we're going to start to expect that move. Likewise, this supply here, yes, it's supply because it's a bullish candle engulfed by a bearish candle. But from a daily perspective, it hasn't broken any significant structure, right? That's one straight movement down, that's one straight movement up, and this is just a pullback. So essentially that's like an II chock, but I don't even want to get into that because it's just a bit unnecessary, okay? So yeah, that's the daily chart. 4-hour chart, pretty similar to the daily chart in terms of, it's got this quite big, large swing range to the downside. We do obviously break significant internal structure here to the upside. So, what we're looking at, we're looking for that bullish internal structure to stay bullish to facilitate that pullback. So, at the start of this week, we were looking to see, would this strong 4-hour internal low hold to continue that pullback, right? And then once we get that bearish IBOS, then that then signals that the 4-hour swing pullback is over because the internal structure has realigned with the swing structure, right? And then we can look for those bearish internal ranges to hold until we take out that swing low. So then yesterday on Tuesday, we did finally get a 4-hour closure below that low there. Okay, so now what is the framework that we use? We try to keep it nice and simple because obviously I'm super guilty of doing this. We can obviously overcomplicate our trading, but now that we have that bearish IBOS here, where we get the candle closure, now this becomes our strong internal high on the 4-hour chart. So the framework we can now use is that we expect those highs to be respected, right? And we expect those bearish internal ranges, that bearish 4-hour order flow to hold until it takes out the weak swing low. Okay, that's the nice simple framework that we use. And then obviously old areas of demand, right? These old levels here, they just simply become potential reaction points to facilitate those pullbacks, nothing more, right? We wouldn't typically expect price to come into these old levels of demand, right? When the internal structure has now shifted bearish, we wouldn't expect these levels of demand to continue that overall move. Why? Because this is a strong high now, right? So we just expect these old levels of demand to facilitate those pullbacks into these strong protected levels, okay? Because these are the levels that are breaking structure, okay? Now, that's the main framework I'm using, and that's the one I'll be concentrating on. Like that's my main thesis. But as you guys would have seen in my pre-session analysis, I'm always trying to look for, what could be the other case? What's the other side of the coin that potentially my brain might be a bit blinded to? Like what could the bulls be looking at? And this is, somewhat of a small low. So there's always a possibility, right? If you kind of look at the larger structure, that this could be one leg up, right? This could be one complex pullback just to mitigate this prior range here, okay? To then continue that movement. That's always something I'm bearing in mind, right? So whilst my main thesis is that we have now switched bearish and I'm looking for these ranges to hold, that is what I'm concentrating on. I'm just aware in the back of my mind that could be one leg up, that could be the pullback, and then we could be continuing to that move, right? So if you look at it from kind of an order flow perspective, if it's a bit easier to visualize, all right, we have this nice big 4-hour range here. Now, it was initially mitigated where we had the range here, price pulled back, and it did tap into that range, and then we got another initiation out. So that's basically why this is kind of my, the main case I'm looking at, and I view that as order flow now shifting bearish because we've spiked and closed below. So we have both order flow switching bearish, and we have structure, the internal structure shifting bearish. So now this is what I'm looking for, right? I'm looking for these higher time frame supply ranges to hold, right? And again, we would expect price to pull back. Like imagine it, let me draw it a bit more accurately, like it pulls back up to here. I mean, you guys will know this if you've watched the advanced modules, right? And then it would pull back and then pull in, right? And then we just get a continuation of those bearish ranges. That's all we're looking at, right? We're just visualizing order flow here, right? So on and so forth. And that's the expectation we would expect. But if, this is what I'll be keeping an eye out on, if my bullish scenario comes in where I'm looking at this could just be a deeper mitigation of this level, right? Well, what can give us good signals of that? Of course, there's multiple ways in which you can look for first bullish signs coming in, but what I'd want to see is this shift bullish again, like these structures here. Then if we get that bullish IBOS, right, then what do we have? Then we have this becoming that bullish order flow again, and that will realign, right? And then maybe that will give us the signal that this is the largest structure at play, right? And then this shifts bullish to facilitate that move. Okay, so again, maybe I'm overcomplicating it a little bit too much for you guys. Maybe some of you guys get it. That's totally cool. That's why I'm saying, like, my main thing that I am concentrating on, and I think is the most likely, at least for now, is that we have switched bearish on the 4-hour chart, right? In terms of the internal structure. So at this point, the internal structure is now aligned with the overall swing structure. Okay, so now we're expecting those ranges to hold until that low goes, right? But I just wouldn't be surprised if that ends up being this movement here, but I'd probably want to see something like that on the 4-hour chart to confirm that. Okay, cool. Hopefully that's kind of simple enough. So coming into the London session, obviously this 4-hour chart's going to be very slow just for an intraday session movement. But so what's like kind of the immediate thing we need to be focused on in terms of for the London session, right? Well, we've had the break and closure below, okay? So there is the confirmed 4-hour bearish IBOS. Now we're coming into this level of 4-hour demand, which I think is reasonably decent because we have this level of 4-hour supply, which led to that 4-hour IBOS there. Now price came into it, and it's a bit hard to see in the 4-hour chart, but if you look on like the M15, price actually comes in, it then pulls back, and then it pushes up. So actually this is kind of that first tap into the wick supply, into the supply here. That's the reaction leg, the extreme of it, and that's the push up. So for me, this is actually the extreme of the flip, the initial flip that came into this level and then had that movement there. And this is more of a decisional. Okay, so it doesn't actually look that clean on its own on the 4-hour chart. Excuse me, because on the M15 or the lower time frames, you can see that that's what happened. That's why I'm kind of paying somewhat attention to this. But this is also pretty clean, right? We have a nice sell to buy candle that led to the high, has nice some inducement there, right? And there's always the possibility, like we said, right, that could be a sweep to continue that movement. But I think that's less likely because this for me is that strong internal structure, okay? But the point I'm trying to make for the London session is after we have a break of structure, i.e. that internal low, what do we expect? We expect a potential internal pullback, okay? So we do have to bear in mind that we could get that deeper pullback there. Even though shorts are pro 4-hour swing trend and pro 4-hour internal trend, after a break of structure, we can get a bit of a deeper pullback, especially as we're coming off 4-hour demand, okay? So intraday, if we're looking for those shorts to continue this movement, it's not the most well priced, okay? Because we have to expect that potentially it could have a deeper pullback. That's the only point kind of trying to make there. So cool, hopefully that makes sense to the 4-hour chart. Yeah, don't really want to go into too much detail there and overcomplicate it any more than it needs to be. M15, we obviously switched. Oh, we didn't switch bearish. We continued the bearish trend, right? Where we kind of got a bit more solid commitment because we had that break of structure pull back up into the extreme, and then that led to the next break of structure, and also giving us that 4-hour bearish IBOS. So in that 4-hour demands, right, it's always quite nice to then go and look, are there any clear M15 POIs within here? Well, we have these sell to buy wicks, so obviously that is an M15 POI. They're not my favorite because it's essentially a fractal demand zone. And what do I mean by that? Well, it means you're reading a lower time frame demand zone, but on the M15, okay? So it means price came up, it pulled back on the M5 and on the M1, for instance, right? And then moved up. So that's essentially what you're reading here. No inducement in the leg. I guess this is a pretty nice inducement, to be fair, but obviously a fractal zone can't sweep on this time frame. So I don't typically like these that much, but I'm aware of them. They can provide reactions. They're nested within a 4-hour zone. So if we get some decent M15 confirmations from there, i.e. An M15 IBOS or a chalk, like when it comes into it, then okay, then the market showed me it wants to hold, and now we have some decent confidence, right? But obviously the zone below it, from an M15 perspective, we would expect it to be a lot stronger because it's a clear pivot supply. It swept this liquidity, it mitigated this level here, right? This is kind of the extreme of this leg, right? This would be, typically a much higher probability POI that I would expect a stronger reaction from, even when price reacts to it. But like I said, we don't have to always guess what's going to happen. We can wait for the market to show us. So I'm just going to rein this in to make it a little bit more sense. So this is basically, just bring it back a little bit. I'll just kind of bring it back to sort of, when I'd be analyzing price pre-Frankfurt. So what am I thinking? Well, we've had an M15 break of structure. So what do we expect after an M15 break of structure, swing break of structure? We expect a swing pullback, okay? So what will signal to us that that swing pullback is confirmed as starting? Well, we want to see an IBOS. We want to see a bullish IBOS. We want to see a bullish internal break of structure. And ideally, in this instance, right, it would make sense if we get a break of that, then that would be like a good confirmation that we could then expect that M15 swing pullback to be starting. Okay, obviously you don't have to wait for that to take longs. You can get in early depending on what confirmations you want. We do also have the bullish CHOC here, but remember, CHOC now just signals an internal pullback. It doesn't signal the swing pullback. We need the bullish IBOS, which is the break of this high, right? We need that to signal the start of the swing pullback. The CHOC here, that just signals, right? This is your internal range, that the internal pullback is starting, okay? So yeah, hopefully that makes sense. So at this point, this is our strong M15 internal high, okay? So let me zoom out. I'm jumping around a little bit here, try and keep things nice and simple again. So we're playing within this M15 swing range, right? We've broken swing structure, and obviously we've broken that 4-hour internal low, and we're coming into 4-hour demand. So I would be, at this point, expecting we're probably going to see somewhat of an M15 pullback, right? Which is also that 4-hour internal pullback. That's basically what's in the back of my mind, or what we'd expect. How far that's going to pull back to, I have no idea, but we can outline POIs, and we know ones that are well priced, etc., etc., etc. Okay? But at this point, we're also within this internal range, okay? So really what I want to see is price break and close above that internal high to get this internal structure to then shift bullish, as then we have confirmation, right, of that swing pullback, right? That's really what I'd want to see at this point to try and look for longs, right? Because I don't really want to be buying into a strong internal high. Yes, you can get in earlier if you want, but in this instance, it doesn't make too much sense for me to be buying at this point, okay? So we've got these POIs drawn up here, but let's kind of zoom into a price for the session, so we can be a little bit more accurate and kind of trade this internal range here. Okay, so what other POIs do we have? Well, we can see towards the end of New York and Asia session, when we had the IBOS there, we came into that level of supply, right? We failed to put in a lower low, and then we closed above the reaction here, okay? So anywhere from the top of the reaction to the base of the reaction, those two orange lines, that is technically your supply to demand flip. But obviously that's quite a big range, so we want to refine it a little bit. So this is where, my favorite when you get a big pullback like that, a big reaction, is just look at the extreme of the reaction leg. Okay, so that's why I would then draw on this demand here. It's a little bit messy, right? You've got quite small candles. So typically when that happens, I'll kind of just take that whole range there and just kind of clean it up a little bit, right? Now we also have this level of demand here, right? Whether you want to, kind of just take, again, the extreme of it, or it's quite a small range, so you can kind of tidy up like that. It did already have a bit of a mitigation there, which isn't ideal. So I had this drawn on, and I'm aware of it. It kind of means I don't want to short through it. Well, I'll explain this a bit more when price action gets there. But this, for me, it's not really that great of a zone, because this is the reaction to that pivot supply, and then that's the move. So these are always going to be the highest probability, the extreme of the initial reaction leg. This is kind of just more of a decisional flip. It obviously does also lead to a break of fractal structure there, so it is valid. It's just this would hold a lot more weight to it, and obviously it's part of that demand chain as well. Whereas this is kind of in the middle, sort of this one leg. It's not that great is the point I'm trying to get at, but it's still information that I'm aware of. It's just not an area in which I would necessarily want to buy from, right? Now, there isn't really any clean, unmitigated supply here. Obviously, price is broken above this wick. So, I drew this on in my pre-session analysis. I'm aware there's obviously going to be, if you really want to be, accurate to what's left, that's your unmitigated supply. So is this something I necessarily want to trade from? Not so much, but if price comes into it, holds, and then you get a break of that low, right, and then a call back into here, okay, now it makes sense. Trading from the strong high, and then you could potentially look for shorts into here, and potentially beyond, with the potential could go there. But we're playing within quite a tight range at this point. So if you've got a short like that, you may want to be thinking about taking heavy partials or looking for a hedge long, depending on how you want to manage. But obviously, you've got to be a bit more aggressive with your management trading here, because after all of these breaks of structure coming into 4-hour demand, right, what's the bigger picture at play? We have to potentially expect that swing pullback. We can't always assume that internal structure and order flow is just going to hold at this point. Obviously it can, but after swing breaker structure, I'm expecting more so that the swing pullback could kick in. Okay. Alrighty. So yeah, and then the other demand we have is obviously this level here. So whenever I draw on POIs, just because I've drawn it on, again, I hope it's obvious, but it does not mean I want to trade from it. It's just information you need to be aware of, right? Because do I want to short from here and trade straight into this? No, I'd rather see that fail, okay? Now, in terms of internal structure, this is where, again, you can overcomplicate it or not, or maybe a bit unnecessarily. We have this nice clear range, okay? So I think we can all agree on that, okay? But then also, what do we have? We have this internal break here, and then potentially that's one leg there. So if we did move down, right, this could be that like internal of the internal low, and you'd have to be aware of that if that continued up, right? But then you also have kind of these smaller movements as well, right? So that's when internal structure can get very confusing and you can have it all over everywhere. So that's where I try and kind of keep things a little bit simple. Focus on your swing structure, focus on kind of the most obvious internal range you're within, which would be this level here. Right now, if you want to trade this short, for me, the way I was approaching this at this point is go, okay, I'd want to see this logo, right? Give us that nice bearish chalk, see that immediate demand zone fail, right? And then you can consider that M15 CE there, or look for your M1 entries, right? And then be looking to trade down into here and take heavy partials at this point, and be cautious that this could trade long or maybe into this level. Okay, this is where like when market conditions like this, I'm just going to look for quick moves really. If it sets up clean. And that would be my thought process. Obviously sweeping liquidity into this level. Okay, so shorts, I'd want to see at least that go and then look for the pullback into that level. Now for longs, also, if we break and close up above here, then cool, yeah, then I'm happy to start looking from longs from these levels as well. Okay, if we get that. Because then what's happened, then internal structure has realigned itself with, well, we've got that bullish internal structure to then facilitate that pullback, and that's the plays we can use, right? So let's play this falling in 15, bar by bar, and see what happens. So this is 530. Okay, so actually should have been a bit nearer. So this is where it was, right, coming into Frankfurt. Do you want to buy from here? No, because you're buying into a strong internal high. Could you do it? Yes, just a bit more aggressive. But you may want to, it's just not for me, right? I don't want to see this low fail, this demand fail before I consider short. So just chilling at this point. Okay, boom. Okay, so this happens in one candle, so it's a bit easier to see when we're tracking it live. But essentially what happened was, is price came into this demand zone, and then it pushed up very, very aggressively, okay? So at this point, you really kind of want to wait for the M15 close, because if we had a close up here, then now what do we have? Now we would have had a bullish IBOS, right? So now we can expect these internal ranges to hold to facilitate that pullback, right? And this is where, especially because if that had happened, right? Let me bring it back one candle just so it might be a bit easier to visualize. If that had happened like this and we closed above here, right, bang on Frankfurt open, because I've seen this quite a lot, this then would be a POI that I'd be happy to trade and continue that momentum, right? When it's right at the start of the move, right at the start of that swing pullback, although this is quite corrective and you're buying kind of right at the top and there'd be unmitigated POIs below, I've just seen this sort of price action happen a lot where it's like this, boom, you get that movement. If you get that candle closure to then confirm this POI, right, I'm then happy to get quite aggressive and look for those buys for me personally. So that's what I was considering. Right, but then what happens? It doesn't happen like that. We can get rid of these drawings. It broke up and it swept back down. Now, if you look on the M1, there was a pretty good sign that was going to happen, because you can see the minute I saw this, right, that big wick, that's big money stepping in to slam that back down. So I knew it was pretty likely that that M15 wasn't going to close. So wait anyway and wait to see what happens. It obviously doesn't. So now at this point, this M15 demand has failed, right, because price has traded through. All right, and that's what you'd want to see. Now, can you take this M1 entry so we get the M1 chock? I'm going to try, so I've always marked the chock with a solid line, but I'm going to try and be a bit more consistent now, because obviously for all my other time frames, I mark chock with a dashed line, okay? So this is what I'm going to try and do to be consistent with that going forward, and then I'm going to mark this with a solid line to show you that M1 boss, right? As obviously that's a much more convincing break. Okay, cool. So this is where you have the flip, the reaction to demand, and then that level here. Now, I was considering taking a short. Now, the flip doesn't sweep, okay? But, what are the odds that price is going to come all the way back up here at this point with momentum, etc., etc.? Now, something, again, I'm trying to do a bit more testing on this and figure it out. But if you go and look on like the 15, 30 second, this flip sweeps, right? You can see here, price comes down, like that, then it sweeps the high and then it pushes down. Okay, so this is something, it's not an M1 sweep, so for the majority of you guys, right, you want to stick to that, but just something to be aware of for those of you who maybe want to dive a bit deeper into the seconds. That flip does sweep as well. But the point I'm trying to make here is that with a move like this, I spoke about this at length, I think, in the meetup on Monday. If I'm going to set an order here, I kind of want to get tagged away, especially when there's all this supply above. I want to get tagged in, and then like we obviously have the demand fail, so that's cool. I want to get tagged in and then it drop. But if price keeps pushing down here, I'm going to cancel this order because, what's the odds that price is going to reject here or come up here and reject here? I don't know. You have minimal stop loss at this stop loss protection at this point. So if price comes down, I'm going to cancel my order if you wanted to take it here. And then as price comes back up, then wait for a confirmation from that level, right? Before you want to get short, okay? That can kind of help whether you have, knowing when to enter on a flip if there's unmitigated extremes. Typically I'll take it if I can kind of get tagged in straight away. And if it just keeps tanking, then I'm gonna cancel the order and wait for an M1 CE, okay? So price just kept moving like this. I didn't even set an order in the end. I was just kind of watching it and then it went down, okay? So if we look at the M15, now what's happened, we've just simply not had that boss of the strong high. It's basically just one big liquidity sweep, right? So the internal structure is still bearish. We have now had a break of this internal structure, or we'll just call it there, right? So for me, it's still significant. So I'm trying to keep the internal structure pretty simple at this point. I'm looking at this larger range. We've now failed to break and close above, so this is still intact. We've now broken this little low here. So now what I'm looking for is price to come up into this level, right? And see if we can continue that movement to take out this low. But again, I'm still going to be pretty damn aggressive with my management just because of where we are. But coming off these breaks of structure, I'm expecting that larger movement anyway. So it's a bit of a tight range. It's not great. I'm happy to look for shorts from here, but it's going to be a quick, 5 to 10 hour sort of trade, depending on obviously how things line up. So this level of demand isn't one I like. No, it's kind of in the middle of the leg. It's a decisional flip. Like I much prefer the extreme of this the reaction leg, as I spoke about. Also, this range had already had a mitigation that kind of led to this move. So definitely not something I really want to look for longs from, but it's just something to be aware of on the M1, right? You don't want to be chasing continuations trading into this. Would be my advice anyway. Okay, so price comes into it and then it starts to pull back. Now I actually swept this low by about a micro pip in here, okay? So technically on this data feed it did fail, but again, like you have this whole range here, right? We can clearly see there is demand here, right? So I'm just gonna leave that there for now as we refine that. So this then would be my M15 POI, right? You can draw it from that whole way. It doesn't massively matter. I just kind of had it refined to the wick there in this instance. But yeah, we'll leave it there. So like I was saying, right, I'm happy now to look for the short to see if we can get the continued order flow. I'm basically looking for a trade short here on the M1 to just target this low, right? I'm happy to take profits. Yes, it could then come down and respect those ranges, but yeah, I think I've driven home the point as to why this is not those great market conditions, not the great environment for that. And I just want to look for a quick intraday move with this, yeah, you guys get what I'm saying, okay? So we have this old flip POI here. So obviously this is kind of, the first level I'd be looking at, but I want to see, the M1 entry model from these levels, okay? I'm not going to set a risk entry on that. And, there's a big wick here. There's just nothing here that's clean for me to want to set a risk entry on either. And obviously we're coming up with a ton of momentum. So at this point I was thinking, oh, geez, I have no idea what's going to happen now. Like this looks like there's a ton of bullish momentum coming in. Maybe it is going to be that movement. So I wasn't even that keen on it at this point. I'm kind of just sitting on my hands and chilling, okay? Now we start to correct around, we blast up through that, so okay, cool, no longer interested in that, can rain that away. What's gonna happen to around this level? Anywhere from here, let's see if we can get sort of an M1, confirmation entry from here, okay? So come into it still with a decent amount of momentum, right? Now we failed to close above that high, right? So what's the bare minimum I need to see for an M1 entry model? The bare minimum I need to see is a chock on my entry time frame, right? So this is the current fractal low, this is what I need to see price break. Now, I've seen a few people kind of get confused of where there was a flip here or not. So let's just talk about it purely from an M1 perspective. Is there any M1 demand here? Well, for me, no, because what do you need for a demand zone? Not thinking about whether it's strong or not, but just the very, very basics. You need a candle that is then engulfed by the following candle, right? If you draw it here on this bearish candle, does the bullish candle close above that high? Valid demand level, right? Regardless of what it goes on to break or anything, you need a candle that's then engulfed by the next candle. Like this is supply because you have the bullish candle engulfed by the bearish candle, right? The next candle closes below the wicks, right? So that is valid supply. This is not valid M1 demand. On the seconds time frame, yes, it very well likely will be, right? You can see here we close above even on the 30-second, right? You've got your kind of range demand there or your pivot demand there, right? That's valid on the seconds. So yes, if price then comes in here, right, and does that, yes, it's a seconds flip, but for me, it's not a valid, it's not valid M1 demand, right? So let me bring this forward now. Okay, so we're kind of pausing. So this is where like, it's about understanding what's going on, right? So you can, if you see this price action, you know, okay, there's no valid M1 demand here, right? But you can read what's happening. Price has come down, it's pushed up, and it's come down with this inside bar, and it's starting to react a little bit. You can guess how that looks on the seconds time frame, right? You can guess that it looks like this. That we did have that valid demand, that we're coming into that demand now, and then if we react and push down, that's a valid 30-second flip. The point I'm just trying to make is it's not a valid M1 flip, but you can understand what's going on in the lower time frames in this instance, and that may be enough confidence for you in terms of flips, right? So at this instance, for me, this is not a valid flip, right, on the M1, because we don't have any demand here. So therefore, although we see this interaction, it's not reacting to M1 demand. So I would just call that a seconds flip, right? Because price on the seconds came up, came down in there, and pushed down. So yeah, if you're trying to keep it simple, especially for you guys kind of starting out, this is not a valid flip. But you do not necessarily need a flip to enter, right? This is a valid M1 supply zone. Why? Because it's a candle that is then engulfed by the next candle, so it's supply. But what did it do? It led to the chock. It led to the fractal break of this low. Okay, so anywhere, well, yeah, you can trade it from here. This is a structure zone, right? Because it led to a break of structure. Now, I saw this big wick and I wanted to cover that wick, okay? So this for me was the POI, right? You don't have to cover that wick, but I just wasn't so sure. So this is how I was then looking to enter the trade, right? Now, as you guys will know, at the moment, I'm always looking to put my entry on the distal and put my stop above the high. But as long as I have decent risk to reward. Now, in this instance, my target really is going to be here for all the reasons I just explained in the higher time frames. I'm not in love with this trade. I'm already not 100% sure about the higher time frames. 3-to-1 RR for me, I'm not really happy enough with that, okay? So in this instance, I refined it to get a minimum of 5R, so my entry was somewhere around here, but I had to do it quite quick. I had roughly a 4-pip stop, and that's how I set my order, okay? So now what happens is price comes in, okay? And it misses my order, and it starts to move down, okay? Now, as this was happening, and as I was waiting, I was also looking at the 15-second chart, okay? So again, I try not to encourage you guys to use seconds until you're first consistent. But this will maybe help to explain what's going on here, right? And you can see how clean it is, right? We can even use a 30-second and keep it even more simple, right? And this was the flip I was talking about on the 30-second, right? Price came in, it reacted, and it pushed down. Now, if this was the M1 price action, then all day long, right? That's where you can then set your entry from the base of the reaction to the top of the reaction, right? If you use that inside bar as a sweep, which I would, right? Because price comes up. Inside bar means we ranged, so we came down, then we swept that high, right? And then we pushed down. So now you have a flip because it reacts from demand. Again, I'm going to go through this slowly. It reacts from demand, right? Fails to put in a higher high, and then we break and close below. So this here, from the base of the reaction to the top of the reaction, that would be your 30-second flip. But it also sweeps the liquidity behind that inside bar high, right? Because price comes down, up, down, sweeps the high, and then pushes down. Okay, so you have a 30-second flip that sweeps liquidity, but what I also love about it is that it mitigates like the previous level here, right? Because you have this level of supply, price comes up, mitigates it, and pushes down. So now this basically is like your unmitigated level. Yes, there could be something in that wick, but really, like, what are the odds that price is going to come up here? It's very likely that this is the level to go. Okay, so in those instances when you have like a messy, say M1 POI, it's quite large, you've got this wick. If you dive down into the seconds time frame, again, you don't have to do this, but just for some of you guys who are ready, you can then clean it up a little bit, and it can give you a lot more confidence to set your entry order behind, so your stop loss order behind that high, right? And then maybe you can enter on the distal, right? That's just, a little tip there. That's something I was weighing up, but I just wasn't 100% sure, so I wanted to be a little bit more safe, and ended up not getting tagged in, okay? So cool, it is what it is. Now, as we push down, I then cancelled my order, okay? Now, this is when then you can then follow order flow, especially if like you're looking at the seconds and you go, right, okay, that level's, now been mitigated here, right? We're pushing down, so now maybe you want to look to get either in the next range, or you may want to refine it to that candle, right? And you can look to follow order flow. But why don't I want to do that? Well, because look at where we are on the M1. especially when price action is quite clear like this with clear swings, right? We've had a down movement and clear breaker structures to the upside, right? So this is the bullish M1 range we are within. If I can visualize it a little bit more and draw on sort of your swing breaks of structure. So this now is like that strong M1 low. You can see here on the M1 we had clear bearish order flow, right? And then we clearly switched bullish. So I'm just going to draw on the most recent demand range that we're in. Right? Do I want to be shorting into this? Not really. Now this is where it's tricky, okay? Because when you bring in the internal structure framework and order flow framework, especially on the lower time frames, and it's kind of why I advise maybe not so much to do it. When I talk about this in the course lessons, I'm like, just try and understand it on the 15-minute and above first, because otherwise, when you bring it into the lower time frames, you can just get paralysis analysis, or whatever the phrase is, right? Because if you're always waiting for everything to perfectly align, sometimes you're not going to get into the trade. But in this instance, with this exact specific scenario, with the way how the M15 was, how we're expecting potentially that larger M15 pullback, how we've reacted from essentially this M15 demand range here, with a lot of bullish momentum coming in, and now price basically trading into this demand range and rejecting the strong low, right? Do I want to be trying to short from this now? Whoops. As price is coming back up, right? Because essentially now you're trying to short against this being that strong low, and most likely it's going to want to take out this high, right? So I don't have confidence doing that. This is not the most best price area in higher time frames. Do I really am I that desperate to get in? No, I want to get in at the start of this movement here, right? Because then I can remove my risk. So if this internal structure stays bullish, right, I'm out. You want to be getting in at the start of that pullback in case it leads to the boss, right? You don't want to be getting in when the demand, the bullish order flow has been mitigated and stayed intact, and now you don't want to be shorting here. Of course they can play out, right? But in these instances, especially with just this exact specific scenario, it doesn't make sense for me to want to set my order here. So I'm chilling. What I would want to see ideally, but I knew it was unlikely to happen, or if it did happen, if we got that bearish IBOS, right, the most ideal scenario is we break, we then realign, that then becomes a strong high, right, and then we can look for price coming into these levels. There's nothing that clear, so I would have waited for an M1CE anyway, right, and that would have been the most ideal for the session, and then we look for something like that, right? That's what I wanted to see. Now at that point, even though I knew that's the scenario I wanted to see, I'm still saying to myself, it's unlikely to happen, therefore I'm probably not going to get the trade. But that's okay. You know what you want to see. If it doesn't happen, it doesn't happen. But at least you can understand now why, for me, that's a very, very low probability area to be looking for shorts. Now, as it starts to react, yes, you can get a bit of FOMO. Even I had an element of that because I was thinking, oh, you know what, maybe I'm overcomplicating things here. Maybe I don't need to dive that deep into, the lower time order flow here. But no, there's a reason why you have to be consistent in your decisions, and that's not something I want to take, okay? So then we come down, but then what happened? We failed to get the break below. Whereas if we had of, then what we would have had that scenario I was talking about. If we had had the close below, that then becomes that strong high, and then I can look for price to come in, potentially give me my M1CE, right? I would have considered a risk entry, but there's just nothing clear and unmitigated here. Not in love with this level, but that would have been okay. It does obviously flip here. It's part of the supply chain. So if we got that movement, yeah, you could consider that as well. It's hard to say unless it had happened. But yeah, so at this point, we don't get the closure. So order flow has shifted bearish because it's spiked through this demand range. Okay, so now technically, this is your M1 or your lower time frame supply range, right? From the low to the high. And now that is the supply range, right? So potentially we could expect these supply ranges to hold. But this is why we use it in conjunction with structure, and why you learn structure first, because structure for me is much more powerful, right? Because this has failed to close below it, so we don't have the IBOS, so structure is still bullish for me at this point, okay? And this can just be a sweep of those lows. So now for me, this high is very, very likely weak, okay? Again, all things considered, is this going to be a level I want to short from? Definitely not, right? So now when this happens, I'm just chilling, I'm done. I just have zero interest in this. It's just shopping around. Yeah, you could trade this. Yes, again, an element of FOMO as I'm watching this came in, right? I'm thinking, okay, maybe I'm overcomplicating things again. Order flow has shifted with that spike. We have this supply chain here. Maybe this is just going to dump now. But no, you got to stick to your guns and use you got to be consistent, right? So I'm just chilling, and then that high comes up, right? Now, at this point, we do get technically the break of structure here on the M1, right? If you leave it, try to cross. But something I'm paying a lot more attention to now going forward is, although that's technically the boss, right? When we came down and wicked here, I also want to see now price break past that low, right? Really, for me to consider that the order flow, the structure has shifted bearish, I really want to see price break past that. Okay, then if that happened, then yes, this would become the new high, right? You would then have that movement here. But because we don't, for me, this is just moving sideways. Like, there's no commitment here. We're just sweeping highs and lows. There's nothing here. So at that point, when price comes back up, as you saw at the end, my end of session markup, I just have no interest in this, right? Like, again, I try and encourage you guys to do this. Do it through the session, before the session, whenever you can remember. Press, you can't see it, it's off screen, but if you bring your mouse over here on the left, there's a little eye. Just click it and it temporarily hides all your drawings. Like, what is this? It's just not clear. Especially when it's with the higher time frames. Look at the M15. Like, is this the area to be forcing it? No, right? It's really, really not. So for me, that's why I just sat on my hands. Potentially, I don't even know where price is at, but like potentially that could dump. Fine, cool, whatever. But there was no entry there for me. I tried to get in that initial movement, and it would have been a break even anyway if I had got tagged in as we came in and I rejected that strong low. So yeah, let's see where we're at now. All right, we're still just shopping around. So this could still play out, right? With that being like that strong high. So we'll have to see how it sort of shapes in for New York, but yeah, there's nothing looking massively clear to me at the moment, really. We do have to be cautious. Like I keep saying, we've had that break of structure, we've had that IBOS, we're coming into demand, so potentially we could see that movement. But at the moment, this is still bearish, right? This range, because we failed to close above it. So this is your strong high. It's just messy. It's super, super messy. Like probably out of the demand, if you did want to get long before we have any more commitment of structure, this would be better because it's the extreme of the reaction leg to that supply and we have that movement. So maybe you want to consider it here, but I probably want to see, at least an M15 chock or something a bit more significant from here, with the current state of play. Ideally, what I'd like to see is like price just clearly break out of this level. Like we get a, clear commitment to it, and then potentially we can start to look for longs from like that to then play it. But as for now, yeah, it's not great. We'll have to see if we get more development, but literally with the price action right now, this feels like the more likely thing to happen, right? After we got that little bearish IBOS there, we'd probably expect these movements like this to continue. Okay, so this is what I'd expect. I'd expect that, right, to continue down. Otherwise, for the larger bearish internal range to break, what we need to see is we need to see this small internal structure shift bullish. Right, because then that movement has failed to take out the low. So then if we get that IBOS there, then we can potentially expect that to come out and take that high. But it's all just getting a little bit tight and complex at the moment, so we'll have to see. But yeah, I think most likely this low is going to go if it fails to take out this high, and we'll probably see something like that. So the high probability is going to be wait for price to break out of this range, and then you can start playing those larger internal ranges up to these premium levels. Or obviously just wait for price to reach here and look for the shorts, or wait for this swing low to go, right, coming down into this level here, and then again you can start to play that swing pull back into this level, right? So yeah, we'll have to see how it goes. Hope you guys took some value from that. It was a bit of a longer one, but kind of just wanted to take a time and really dive into the details of price action. Cheers, guys.